Most traders think the market is against them. They say the market is manipulated. They say the broker hunted their stop loss. They say the strategy stopped working. They say the candle moved only because they entered. But the truth is usually harder to accept. The market is not your enemy. Your habits are. The market does not know your name. It does not know your account size. It does not know where you entered because you felt emotion. It does not care if you need money today. It does not care if you lost yesterday. It does not care if you are trying to recover. The market is just moving. But your habits decide how you react to that movement. And for most retail traders, the reaction is the real problem. A good setup appears, they enter too early. The price pulls back, they panic, they close the trade. Then the market goes in their original direction, so they get frustrated and enter again. This time the entry is worse, the risk is bigger, the emotion is stronger. And now they are not trading the market anymore. They are trading their feelings. This is how bad habits destroy accounts. Not in one big moment, but slowly. One emotional trade, one moved stop loss at a time, one revenge trade at a time, one oversized position at a time, one broken rule at a time. Most beginners do not lose because they never find good trades. They lose because they cannot behave correctly when the trade is live. Before entering, everything looks clear. The setup looks clean. The plan makes sense. The risk looks controlled. But after entering, emotions take over.
Because they never find good trades. They lose because they cannot behave correctly when the trade is live. Before entering, everything looks clear. The setup looks clean. The plan makes sense. The risk looks controlled. But after entering, emotions take over. A small red candle feels dangerous. A small profit feels too good to lose. A small loss feels impossible to accept. So the trader starts changing the plan. They close too early. They hold losers too long. They move the stop loss. They increase the lot size. They take trades they never planned. Then they blame the market. But the real problem was not the market. The real problem was the habit of entering without waiting, the habit of risking too much, the habit of checking the chart every second, the habit of needing to win every trade, the habit of thinking one trade can fix everything. That is not trading. That is pressure. And pressure makes traders weak. A professional trader is not perfect because they know the future. They are better because they follow rules when emotions are strong. They can take a loss without losing control. They can miss a trade without chasing. They can wait for confirmation without feeling left behind. They can stop trading when the day is not good. That is the difference. Beginners think consistency comes from a better strategy, but real consistency starts with better habits. You can have the best strategy in the world, but if you break your rules, it will not save you. You can have the cleanest chart setup, but if your risk is too high, one mistake can hurt you badly. You can know support and resistance. You can know liquidity. You can know price action.
One of the biggest advantages of natural. But if you cannot control yourself, knowledge will not be enough. Trading is not only a chart game, it is a behavior game. Your daily habits become your trading results. If you always rush entries, your account will show it. If you always move your stop loss, your account will show it. If you always revenge trade, your account will show it. If you always risk too much, your account will show it. Your account is not only showing your strategy, it is showing your discipline.
And when you improve yourself, your trading becomes cleaner. You do not need to become perfect. You need to become more controlled. Start small. Pick one bad habit and fix it. If you overtrade, set a trade limit.